Is gold a good investment, or as some say, just a pet rock right now? Joining us now from the CME group is their senior economist, Erik Norland, who recently released a report looking to answer this exact question. So Erik, thanks so much for being with us in studio.
Thank you for having me.
So let's take a look at gold prices so we can talk about your report, Erik. They have been falling to levels last seen 5.5 years ago. The metal is now down 10% year to date. So many are wondering whether gold is still a good idea right now.
Well, I think it's hard to say, and I think it really depends on what your investment horizon is. If you think in terms of decades, it might not be a bad idea to hold some gold in your portfolio because it can be a great diversifier in periods of war, instability, inflation, and it has almost no correlation to stocks or bonds. So it can be a very useful portfolio diversifier. On the other hand, in the short term, meaning in the next couple of years, it wouldn't surprise me to see further downward pressure on gold prices, in particular because there's not a lot of inflation present. And then secondly, mining production, which I think is sort of underestimated as a factor, continues to grow.
And we're going to touch on that in a second. But first, one of the main focuses in your report looks to the S&P 500, and you compare it to the gold ratio. Let's talk about your findings here.
Yeah, so the S&P 500 and gold have a long history. They go back together since 1928. And what I think is really fascinating when you look at the chart history of the S&P redenominated out of dollars and into gold is that it exhibits incredibly strong trends. There are periods in which the stock market has fallen as much as 95% versus gold, like it did from 66 until about 1980. And there are other periods in which stocks have outperformed gold by as much as 1,800%, which was the case from about 1982 until about 2000. But since 2000, the equity market has generally fallen against gold. Between 2000 and 2011, it fell about 90% when denominated in gold terms. But since 2011, as gold prices have weakened, that's reversed. And so I think the question now is that reversal going to continue to go, or is it going to move back in the other direction? Will it move back in gold's favor?
Now, one of the reasons where when people make a bearish case for gold, they point to the upcoming U.S. rate hike. But that's not the reason that you're pessimistic on gold right now. You mentioned it before. It really comes down to mine supply for you.
Right. I think that both inflation and interest rates and mine supply all have an influence. But I think that mine supply has a much greater influence than what most people give it credit for. So, for example, during the huge gold bull market from the late 60s to 1980, that corresponded not just to a period of high inflation, but also to a period of declining mine supply. And then partly as a result of the high prices in the late 70s, there was a huge incentive to invest. And so during the great gold bear market, which lasted from 1980 until 1998, that also corresponded to a period of a dramatic increase in gold supplies. But those peaked in 98 and then started to decline until 2009. And so, of course, we saw another huge run up in gold prices. But since 2009, gold supplies have been rising. And I expect that mining supply will probably continue to grow.
Now, just to counter that point, Erik, SNL Metals and Mining released a report today that showed that worldwide budget for non-ferrous metals exploration among producers actually fell 19% to 9.2 billion this year. So could this not help the mine supply issue?
It will help it eventually, but the problem is that reduced budget will begin to affect mining supplies several years down the road. I think probably on average as many as 5 to 9 years down the road. So probably about 7 years from now, we might see mining supplies start to decrease. But there's no guarantee that the mining supply will begin to decline as soon as 2016 or 2017.
Erik, thanks so much for stopping by.
Thank you.
And thanks for watching this edition of the Gold Report. We'll see you tomorrow.